Let's get to our third story, where we're going to focus on women of Wall Street. We highlight women that are moving and shaping the world of finance. And today we're going to take a look at hedge funds with Maria Vassalou, founder of Vassalou Capital Management. She's currently in the process of raising funds to launch her own hedge fund. What was the decision like to strike out on your own?
Well, I was with Barella Weinberg for 6 years. The moment was ripe to make this move, and in discussion with my investors, we decided that it made sense to move ahead.
Do you believe right now, for all the talk of money pouring into, and you're speaking at an event at Bloomberg later today on diversity in hedge funds, for all the talk of LPs focusing on diversity more, do you believe that that talk is turning into action yet?
Well, first of all, we have to be clear that allocations should be going to high-performing managers, independently of whether they're women, men, or people of color. But on the other hand, there is a lot of talk about diversity, inclusion, and such efforts especially from the public pension plans. We don't see the action. So there is a lot of talk. There isn't necessarily the action, and quite often the action contradicts the talk.
We had a similar event last week in private equity as well. Women in private equity, the numbers are not great there. They're really not great in hedge funds. And so I'm kind of wondering if you think that anything has been changing to promote more female hedge fund managers, and if that kind of perception of kind of the hypermasculine macho trader still exists in terms of what's needed to manage a hedge fund.
I don't think you need any of that to manage a hedge fund. What you need is to stay cool-headed, to be collected, to be able to perform under pressure, and to be able to risk manage tough situations. So you don't need this hyper masculinity to do that. And I think all the academic research has shown that women can perform at least as well as men under pressure, and actually they have been shown to do better in terms of risk management in certain situations.
What's it like to try and get money right now?
It's tough. It's a tough environment for everybody. But I think because it's such a tough environment, allocators also need to protect their own, career in a way. And then there is a sense that it's much safer for them to allocate to big managers than to allocate to smaller managers. So there is a little bit of this going on. But hopefully, those who perform will be able to grow.
You're going against the grain quite a bit here. There are more funds that are closing than are starting up. Is that helping in any way, the fact that there are just kind of fewer funds out there these days?
Well, I wasn't looking at the statistics really when I made my decision, but really the driver was the encouragement from my investors, and also the circumstances that were ripe. And it's great to be in a position to really run an organization in the way you think it should be run. And as a small manager, we can better align our interests with those of the investors, be much more flexible, and focus on the things that are important.
Interestingly, also macro as an asset class is having a bit of a tough year too. How are you differentiating yourself in this kind of environment also?
We've been having a good year. We can really speak very specifically about performance, but one of the themes that we've had is that of low inflation. It's been a theme that we've worked on for a long time. We've done a lot of research on, and really what we have found is that there have been structural changes in the economies over the past 10, 15 years with globalization, with digitalization, that are actually disinflationary forces in the market, and so it's very difficult to generate inflation. And so we've been in this low inflation camp that has paid off.
Something important too that people forget about you is you're a quant. You're
yes.
a quant by trade.
Yes.
That's a really interesting thing to be in a macro environment, I think, also. I mean, how are those kind of, and also, frankly, also male-dominated industry. A lot of the, I've been learning quantitative finance myself.
Yeah.
It's, how are you finding those skills are kind of helping you now, given you've gone through the process, gotten the PhD in quantitative finance and in macro?
I think they're very useful because we live in an increasingly complex world. There is a lot of information, a lot of data you need to process. process. It's very hard to do it in a discretionary fashion. And so being able to use quantitative tools to process information and then create a repeatable process where the risk management is embedded in it, I think that's necessary in this world that we live in.
When you're building a team, how do you do that? And stay diverse, but also deliver returns? Like, what's best practice for you?
Well, I built my team over time, and it is very diverse. We don't have two people from the same country or same, background. But at the end of the day, you build the team with people who are passionate about what they're doing, they're committed to what they're doing, and where there is a good culture and good communication.